Presenting to you our next speaker, Brijmohan Lavania. Brijmohan Lavania is Head of Operations by day and a YouTuber by evening. He is a young and enthusiastic chartered accountant by profession. He is also a certified DISA. He has 5 years of post-qualification work experience in his domain. He is skilled in tax planning, accounting, income tax filing and advisory and auditing. He is currently working at Taxbuddy and he also owns a YouTube channel by the name of CA Brijmohan Lavania, where he uploads videos on topics such as income tax and financial planning. Without any further delay, let's welcome CA Brijmohan Lavania. अरे बजाओ थोड़ा जोर से ताली. Thank you.
Okay, so the next question will be like how many of you are earning more than around 10 plus lakhs per annum? Okay, how many of us salaried person, like just working? Okay, around 20%. Okay, fine. So in the first session we have heard by Shreyas sir on the passive income. Okay, and in the next session Nirav sir covered this investment part. So I'm going to cover the taxation part and I'll explain you how to file ITR 1 especially, and before that I'll briefly talk about few terms which you will have to understand before getting into the taxation topic. Okay, so first thing is how many types of income in taxation, you know? It can be of any number of incomes, okay, but in income tax we have to define the all type of income into 5 categories. Okay, the first and foremost is salary, income from salary, okay, where we are working for a employer and he gives a monthly salary to us. Okay, the next income is business income, when we are doing or running a business or startup company. Okay, the next third income is from this capital gain from the market, we are doing investment and earning some income on that. The fourth type of income is income from house property. Basically it's a rental income or it can be an investment, passive income, it can be converted into passive income as well. Okay, the fifth, anything which does not cover in this first 4 set of income comes under other income. So it interest income, it's like FD interest, or it's like a gift income, or anything you want to add in that other income. So basically there are 5 types of income in income tax. Okay, the next topic is next thing I want to explain is the financial year concept. Okay, so whenever we are doing earning income, so it is taxed based on the yearly basis. Okay, so the financial year starts from 1st of April, okay, and ends on 31st March. So currently the financial year running is financial year 22-23, 1st April 2022 to 31st March 2023. So whatever income you will earn in these 12 months will be taxed the next year. Okay. The next thing I want to explain is the residential status basically. So the income is in India, the income is taxed based on the taxability of the resident. If you are resident in India, then every income is taxable. So you are earning you are serving client in foreign, then also it is taxable in India. Okay, if you are NRI, then it is not taxable. Certain income is not taxable. Okay, now we'll start with the presentation. I'll just briefly cover in 30 minutes. So I hope it will add value. Okay, explain benefits of tax filing for students. Okay, like whatever tax the government collects from us, it helps the road infrastructure or any government expenditure or spend for education. Okay. The next benefit is while the income is act as a document proof. Okay, so Aadhaar card is your address proof, driving license your license for driving. Just like filing ITR, okay, filing income tax return, it acts as your this identity proof as well as income proof. So how can you explain certain people that you have earned so much of income in this particular year? By filing income tax return. Basically, this seamless processing of return, income tax helps you like filing income tax return helps you getting a loan very conveniently. I think you have not experienced so far, but your parents must have. Okay, your parents have taken home loans. Your parents few of parents have taken for you educational loan as well. So you can just understand that point of view. While whenever you require any loan, you need to have documents. So this is claiming refund. Okay, I'll explain which you will understand better. Okay, so many of you are students and maybe working as a freelancer or some part-time somewhere. Okay, on a freelancing basis. Okay, it's like content writing or social media handling, for example. So you are getting some amount from a company. Okay, or basically you have done some internship somewhere. Okay, so they'll hire you as a contract, and on which you must have heard that they have deducted your 10% TDS. Okay, but you are not falling into the income, like you are not liable to pay tax, but still they have deducted 10% tax on your income. So how can you take that 10% from the government? By filing ITR. That you can take as a like refund. Whenever you file income tax return, you will get that amount into your bank account. Okay, so if any of you have deducted, like someone has deducted your TDS, okay, then you can file ITR and claim that as a refund. Then this is like next one is credit card. So I think a few of you must have already credit card. Basically, it allows us to spend now and pay later. Simple words, okay. So for getting the credit card, you must have to submit some income proof. So by doing that, you will able to get the credit card thing. Then easy visa processing. So basically, whenever you are going for foreign trips or something, or going abroad for foreign higher education, so at that time your income proof or income document required. I know few of you have doubt in mind that we are students, why we need income. Okay, so I'm not saying for you, like for your parents, if they are not filing, because at the time of visa processing, your parents' net worth certificate, your parents' income proof are must have document. Otherwise, you are you may face trouble in visa processing. The next is medical insurance. As of now, you will not understand, but this thing, the medical insurance is the must thing to have. I'll cover in the next slides, okay, on this. But it helps you take medical insurance if you have income document. Sorry. Okay, loss of compensation. So basically, loss compensation. So, in the first session, like Shreyas told about the passive income, and in the next session, Nirav told about investment and investing in mutual fund, investing in ETF, something. So, on that, if you have incurred some loss, okay, how you can carry forward that loss, or can set off that loss against the profit which you are going to earn in the next coming years? By claiming in the ITR. Okay, so if you're in I think if you have heard from your friends and family members, many of you have earned in negative things in stock market. Okay, last year if you see COVID thing, then many people have incurred huge losses. But if you claim in ITR that, see, in this financial year I have incurred a loss of 1 lakh rupees. So whenever you earn in coming 8 years, okay, the loss can be carry forward or postponed to next 8 years, okay, up to 8 years. So that loss can be if you file ITR, it can be helpful to you in coming years. Then avoid penalties. Okay, I think this will help. This will help you to avoid penalty as well, because you don't know when you fall in the mandatory thing of the ITR filing. So basically, there are certain limit. If you fall into that category, then the ITR filing is mandatory for you. And if government send notices or something, government asks you why you are not filing, then if you don't have proper answer and you fall into that category, then it's like the time is gone. Now we have to do belated filing or something, right? Late filing. And for that, you have to pay penalties or interest as well on that thing. Because, see, government, anyone can waive off the money, but government will not waive the interest and penalty and the taxation thing. So, The next is interest education. I'll cover in the next thing, because basically if you take a loan, education loan, and you pay any interest on that education loan, that benefit also you get in this ITR. In basically you're deducting your income. The next is presumptive taxation. So this is for the business class people, those who are running startups or those who are just planning to enter into businesses, and they want to start their business, and like by filing they can book their losses, because in few like first or 2 years they like every business incurs some losses, right? So if you have for filing, what documents you need? Okay, so like first is like your PAN card is mandatory. Okay, those who don't have PAN card, you can get your PAN card done in within 30 minutes online, free of cost, in income tax website. Okay, I have given the links. I'll explain that link in later. So if you do not have PAN card, I request you to like make the PAN card mandatory, because it will it will be needed in future years to you. And like PAN card and Aadhaar card will be required only for the registration. So basically you log into one website, you register to any website on any social media. Just like that, you have to create your account on income tax, okay, income tax portal, and where you will get all your details. It's like bank account opening, same like you have to open an account with income tax department, that you have this PAN and you have this your details, and this is like basic details, and that you have to submit, and on yearly basis you have to file the ITR. So PAN card and Aadhaar, bank details. Form 16 basically you need from your employer. Like this is only for purely salaried class people. Okay, those who are working with the employer, and yearly basis they'll get Form 16 Part A, Part B. Okay, both you need to have for filing. If you don't have Form 16 part, okay, you are working with some small startup and it doesn't give you Form 16, then you can generate the salary slip, because he can give you salary slip at least. On the basis of salary slip also you can file the ITR. Okay, and the next thing you require to file ITR is deductions and investment proof. Okay, so you have invested somewhere and you need to claim that investment in your income and file ITR. So at that time you need that document proof as well. The next thing is Form 16. So basically Form 16, it's like just like our bank statement. This is a Form 26A statement in which all your income, okay, the government knows all your incomes and whatever tax you have paid, just like I told about the TDS part. So that TDS part will come here, okay, it is like a passbook of the income tax. Okay, so whenever you are doing any financial transaction or reporting your PAN card to any person, that goes in government's data, and government knows about it while you are selling property or while buying some property, or while giving to someone any basic details like for income proof. Okay, so this thing is deduction for home loan. I know many of you have not any home loan, but in coming 2 to 3 years, you might need a home loan. You are planning to buy a home, right? So for that, I'll just briefly talk about whenever you are planning to buy home loan, you must you should have at least 3 years of last ITRs. So for that, if you plan from day one, like from today only, then after 2 to 3 years, you will easily can get home loan based on your income document. So first thing you have to do is like filing of ITR. Also, after getting the home loan part, the interest while like in EMI, once you have taken the home loan, you pay the EMI. So in the EMI, there are two components: interest component as well as principal component. So in interest component, you can claim benefit up to 2 lakhs per year, and the principal part 1,50,000 you can take in section 80C. This is for deduction part. I know this is going little bit like some jargons or some technical terms, but I can't help it, because this we have to understand, okay, in order to understand the basic taxation part. Okay, and these are I try to simplify everything. I'm not putting many sections here. Okay. So next thing is for like deduction for car loan. Okay, so this is something interesting, and you can tell your parents if you're planning to buy a car by taking a home loan. Okay, so I just have one request: if you take a normal car, then you won't get any tax benefit on that. Okay, but if you take an electrical vehicle car, on that you can like whatever amount of loan you have taken on that car, okay, whatever interest you are going to pay on that loan, that interest will be deducted from your total income in that particular year. So it will be a very interesting thing. And the timeline is like 31st March. If you are trying to, if like this festival season is coming or something, I think if any one person will get this, understand my purpose is served here for this session. Then this is like education loan. Many of your students and you are trying to pursue higher studies, okay, and you are planning for education loan. Your parents will take education loan on your behalf. Then also when they take education loan, whatever interest they are going to pay, they will take tax benefit on that part. Then ATC is coming. So basically ATC is like I have talked about if you have taken home loan. So whatever principal you are paying up to 1,50,000 is covered under ATC. So and the next thing you can many of friends or relative or you, like have sold your parents a life insurance things. Then pension plan I'll skip 80CCC 80CCD1 because this is for government employees. And this is a pension plan. Basically covers under ATC only up to 1,50,000 deduction. Our planning or government already have stopped the pension thing for the government employees. So current generation who are getting into government job, they are not eligible for the pension thing, right? So this is for a private sector, and anyone can invest 50,000 in a year while saving, and the tax benefit also will be given. This is medical insurance. I just want to seriously see whenever I give my example. I become chartered accountant in 2018, and from my first salary I have done three things. First thing, I have taken term loan insurance. Okay, term insurance. Okay, term insurance is like you have to take some certain amount of basically coverage on your life. If anything happens to your life, okay, then certain amount will get to your family members whom you make words, and the premium is very low, so that you can cover at least your life. Okay, so anything happens to you, your family members will get something. And the ideal thing is at least 10 to 15 times of your annual salary you should have your life covered. So basically if you something happens to you at the age of 20, 25, 26, 28, and their financial thing can be handled. So this is very first thing you have to do whenever you are start earning thing. And those who have already started but not taken term insurance, I highly suggest talk to some insurance advisor and take this term insurance. Visit and check out their website and talk to their tax expert and the insurance expert and take that benefit. The second thing I have done is medical insurance. Okay, medical plan is basically, it's like I have taken family floater plan of around 10 lakhs. So basically, if any of your family member or you fall sick, okay, and admitted to hospital, okay, like met with an accident or something, anything, any disease, okay, then whatever the medical bill of that hospital or any coverage of your expenses treatment will be covered by that medical insurance. You have to pay a certain amount of premium, but trust me guys, that premium will be hardly around 10 to 20% of the this sum assured, okay, and mostly below that only. So it will give you, it will safeguard your annual income or your saving, okay, and also cover any uncertain events which are not in your control. Okay, so and one of the example is health. Your health is not in your control. We assume and we take granted that health is in my control, but it is not in your control, and anytime anything can happen to you. So you have to prepare for the worst. So medical insurance is ideal. You should take. Now let's take the example of the tax deduction part. So here I'll divide into two things: your parents and you, and your spouse, basically wife or your husband, and your children's. I think many of you are students, so I'll not talk about that part. So basically, and if your parents have taken separate policy for that, because see, the cost of inflation is around 7%, right? Inflation is rising around 7%. But the medical cost is, like the inflation of medical thing is rising much more than that, around 10 to 15, around 12%, mostly. And in coming years, it is going up. That's why the medical facility or medical treatment is becoming day by day costlier. So you have to cover that thing. So and the more you delay, the premium will be more. Okay, so if you take insurance policy or medical insurance, I'm not an agent, okay, so don't like assume in your mind that I'm selling the policy or I'm suggesting. No, you have to take this thing to cover your life, okay, and to plan your financial better. Because see, we have talked about passive, we have talked about investment. Everything comes later if you do basics right. Okay, so you have to insure this thing. And your like, if for example, if you take insurance policy at the age of 40, the premium will be almost 5 times when the policy will you take at the age of 20 or 22 or 23. So, and also you can fix fix that insurance in an early age, so that you can plan. I have to pay at least 20,000 on my health insurance, and you can set aside. You can say you can pay monthly insurance as well, so you don't feel a burden of paying once in a year. And in this part, I must tell you that even if you have not taken, this is for your parents, like grandparents or most of parents. If they have not taken any health insurance and they have incurred medical expenditure on that, like on health, okay, they have done some expenditure. So up to 50,000 they can take benefit under this section. They can deduct their income up to 50,000. This is exception point for senior citizen only. The person has to be age of above 60. Then only he can claim on the basis of bills or actual bills, not on insurance premium. Obviously, if you do some charity like PM Care Relief Fund or some flood relief come or some trust or some education trust, that then also you can get, if you do some donation, then that donation part you will get deduction. I will not go much in detail. You can read in later if you are interested in this thing. And also this next slide is on interest deduction. So like many of you have a saving bank account and you are earning certain amount of interest. So do at least in mutual funds you can put short-term liquid and funds you can invest that, because in saving it is not beating inflation part only, because in saving you are getting 4 or 3% or 5% max. But if you do if you check the inflation, someone had told in the earlier session it is around 6 to 7% currently the inflation is. So it is not covering your inflation part. So ideal is you should keep emergency fund, okay, but up to 3 to 4 times of your monthly income, so that if anything, your job, if you lose, you get fired or you met with an accident and you are not able to work for coming 2 to 3 years, so your emergency fund will help you. So that emergency fund you can keep in liquid funds or in safe where the risk factor is very low, and you can get returns around 8 to 9%. This is like like your parents, if your age, like parents' age is above 60, then for any interest they are earning, 50,000 deduction they are getting. And the next thing is on 80U, basically it's a disability. If you are going under any, if you have any disability, in 10 minutes I'll explain how you can file your ITR. I know it will be very quick and very short, so please pay close attention to this thing, because if you remember that I'm 100% confident, or I help you, you can file your ITR independently. Okay. So you have to visit the website called www.incometax.gov.in. Okay, you have to register yourself, okay, with the PAN and Aadhaar, and you have to update your bank details. After that, like you can like go to this. This is the screenshot I have taken. Okay, you have to go to e-file section. First tab, income tax return, and in that file income tax return. Simple. You don't have to do anything. You just follow these steps. And the eligibility also I mentioned. It is ITR 1 is only eligible for the resident person, okay, who are staying in India. The total income does not exceed 50 lakhs, and they have income from salary, one house property, family pension, agriculture income up to 5,000 plus. बाकी अपना जो कैपिटल गेन में है, बिजनेस इनकम में है, दे आर नॉट एलिजिबल फॉर दिस ITR 1 filing. They have to file separate ITR, which we may the Rotaract District Club may conduct another session, and we can cover that part. So the basic step is you have to register on the income tax website, go to income tax return, select income tax return, file income tax return. Then basic one question will come, select assessment year. So just like financial year income tax, we call it as assessment year. So every financial year return will be filed in the next year, and the next year called as assessment year. So it is like 1 plus. Simple. You understand the financial year, April to March, okay? Add +1. Next year will be called as assessment year. So like for 2023, which means the current year is financial year is 21-22. You have to select from the drop down. You have to select which mode you want to file online. I prefer it is like online. It is basically a very simple form of 5 tabs. Very simple, and it can be done into 15 to 20 minutes max. You can just file your ITR within 15 to 20 minutes. If you are filing for the first time, if you are filing for the like many times, you can file it in within 5 minutes only. If you have only one salary income or some basic income, you have to select individual because you are individual. Select ITR type, select your base. See, you have to select the category of like you are filing for like in which category your income exceed your fall into the mandatory thing, or your certain there are condition that in that particular you have certain expenditure or certain income, then you are eligible to file the ITR. Then the form you have this while creating your account, your profile already will be created and it is auto populated. Your bank also have been added. It will be shown as populated form. This is the screenshot of form. Then your income from salary, you just have to put your salary like gross salary. The gross salary, which means your CTC. What is your CTC? Then what are the exempt allowances? What are the deductions that you are taking? And you can simply add on your 12-month salary slip, all columns, the total amount you have received, not in hand salary, your gross salary, because in hand salary the deduction like you will get in hand after taking the deduction part. So that you have to like rework, add the deduction and calculate the income. And if you have any income from house property, basically income from house property is like rental income. If you do not own a house, you can just simply ignore this. And if you have any other income like freelancing income, or you have done some, you have got some commission, or you have got some interest income, that you can add there, okay. And if like few incomes are exempt. For example, if you have got any scholarship from any college or any event, okay, that income is considered as exempt income. But receiving pocket money from your parents, that you can report here, or you are getting some lump sum amount from your family members, any your relatives, that you can report here. Then we have discussed the deduction part, ATC deduction for the home loan principal or LIC or investment in ELSS, NPS, PPF, EPF, that covered under ATC. You have to put, if your amount is up to 1,50,000, then you can claim that. If your amount exceeding 1,50,000, then max deduction you will get of 1,50,000. The deduction basically means your total salary will be reduced to that deduction part. So my salary is like around 10 lakhs, so 1,50,000 will be reduced and the tax will be calculated accordingly. Then this other section, medical insurance, donations, interest section, all you have to just report and you have to fill. It is very simple, just like in an Excel form, Google form if you come across. Then whatever taxes, if you deduct, like someone has deducted your taxes, all the taxes will be auto-populated, because I've told you that in 26 years, if any taxes is reported on your PAN, it will be reflected on that, and whatever that tax is there, it will be shown here. You just have to reconfirm that from your form 16 or any other statement. Like whoever deducted your TDS will give private some evidence or receipt or document to you. From that you can confirm. Then basically I told you everything, your personal information, your income details, your deduction detail, taxes paid and tax liability. These are 5 total basically a bucket or sections. Previously in previous slides we have taken screenshot of each section in detail. Bus, everything is covered into these 5 tabs and your ITR filing is done. You just have to proceed, or you can just download your computation, basically a summary of your income, that how like whatever income you have, whatever deduction you have, just reconfirm that and you can just submit it. So if you are eligible for any refund, it will show on above part. If you check that, it is shown as download or print. You can just download or you can print as well. And in below you can see preview return, and then you can, it's like any printer view, like see any print preview similar to that. It will show and it will ask one confirmation that you are filing on your on your end. If any person or any CA or any person who is filing, it will take as self-declaration. So even if our filing work we are giving to someone else, okay, he is not responsible for that. So while filing any form, the declaration comes now. For the best of my knowledge, all the information is true and correct to the fair knowledge. That thing is a declaration, and I am giving true information. All the information, all the income part is correct from my side. Because later you cannot decline the confirmation they want, the declaration they want, government. Then comes a verification page. Basically, it's like Aadhaar verification. You can just complete verification through Aadhaar, complete verification through your bank account. Just an OTP will come to your Aadhaar registered mobile number or your registered bank account number in mobile, and SMS will come. Just have to click that and everything is done online. You do not have to submit any document to anyone. You do not have to disclose anything. And in this account, you can check your previous records, and this one-page document you can, I said now, you can show everywhere where it is needed, like while visa processing, while taking bank loan, or while taking any education loan. So thank you for patient listening. I'm really sorry. I cannot entertain much because that topic itself is a little bit dry. So have to respect that, because if I focus on much or entertaining, I think many sessions are already conducted or events are happening for this entertainment part. This is an educational part, and it is very important thing for your career. See, like we have our family doctor, right, who treat us whenever we fall sick or something.
Basically, I wanted to understand what is the difference between old tax regime and new tax regime.
Absolutely good question. Actually, I am not covered in the entire PPT because I have only got 30 minutes. So many things I have not covered. Okay, one of the thing is new tax regime and old tax regime. I'll briefly talk about that thing in 2 minutes only. Okay, and I'll give you understanding. See, old tax regime, if you see now, it has higher tax rates, okay, and slabs are also basically, for example, up to 5 lakh of income, you have tax rate of 5%, and from 5 lakh to 10 lakh of income, you have tax rate of 20%. Directly jump from 5% tax to 20% tax, okay, and if your income exceed 10 lakhs, then 30% tax is coming in under old regime. But every part of deduction we have got that you can take benefit in old regime. In new regime, it simple means old regime for old people, new regime for new people. Just like I'll explain. For example, see, everyone, you are young and everyone wants will go to their first job or second job and earn some handsome amount of income. So on that, you may fail to plan some taxes or may fail to invest somewhere. Okay. So how you can select your regime, old and new? So old regime promotes all tax. Basically, saving is new earning for them. Right? But for new generation, they want to spend a lot. Okay, if their income is 10,000, they want to spend 50,000. Just like that. Okay, so if you are not saving anything, so you go under new regime. Okay, the new regime comes under like up to 5 lakh, 5%. So if your income falls under 5 lakh, I think 80% crowd falls under 5 lakh. So doesn't make any difference, because in both regime, the tax is 5% only. But from that, in new regime, they have divided the slabs, they have reduced the slab. From 5 lakh to 7.5, the tax is 10%. Okay, but in old regime, it is like 5 to 7.5, 20%. Then 7.5 to 10 lakhs, the tax rate is 15%. But in old, it is 20% still, right? But in new regime, you won't get any tax benefit. Basically, your gross salary will be taxed. So if you see the comparison, here you are comparing X Okay, in old regime X minus something, but here you are just putting tax on X, right? You are not deducting anything. Okay, and in new regime, if your income exceeds 10 lakhs to 12.5 lakh, then tax rate is 20%. And your income exceeds 12.5 lakh to 15 lakh, then your tax rate comes under 25%. And if your income exceeds 15 lakhs, then the 30% tax slab comes. So any person who will earn 15%, like above 15 lakh, is basically working 4 months for government out of 12 months.
Thank you so much for touching that. We have a question from the left side.
Tell me the difference between the VAT and the GST.
Okay.
Which one is beneficially for the collection of the revenue?
As of now, I think this is the drawback of our education system. VAT is no longer in the current regime. Basically, there are two types of taxes. Okay, I'll answer your question, don't worry. You can sit, okay? So there are two types of tax, direct tax and indirect tax. Direct tax is a form where the government directly collects revenue from you, like taxes from you. Income tax is one example. Basically, you earn income and government takes taxes and earn revenue, okay? And all the taxes, like for us, it is cost, for government, it is income, basically, right? So this is income tax is an example of direct tax, and VAT and GST is an example of indirect tax. You do not know when you are going to pay tax. For example, you go to restaurant and you order some, and in restaurant they have like in the menu they have like bottom of the menu they have written 5% GST will be extra, GST will be charged separately. You have heard that thing, right? And you see, oh, this item is for 200 or like 300, and you order, but in the bill you see 300 plus 5%, right? So that tax is a type of indirect tax, okay? So first and foremost thing, difference between direct and indirect tax. And now comes to indirect tax. There are other types of indirect tax as well. VAT earlier, before 2017, specifically 1st July 2017, VAT used to like charge on the goods. Okay, in Dubai, as of now, VAT is applicable only. Okay, and service tax also was there. Okay, so for any like professionals, the service tax was there. For goods, like those who are trading, like trader, one ad we have saw on Mehta sir, shoes wala business. So that comes under VAT in earlier, before 2017. But after implementation of GST, if you have heard of one ad of one nation, one tax. So basically they want eliminate all type of taxes, octroi tax, basically surcharge, every type of indirect tax, and they have come to merge their tax and called as GST, goods and service tax. So as of now, GST is being implemented, and it is like charge on various items. You name it, GST will be there on it. I hope I have answered. Anyone?
Thanks for touching that, sir. In the interest of time, we'll take one last question, if there is any. Yes,
there
please.
is one person. Yes, you, sir.
Can you please pass on the mic?
Sir, so I had a question that we see businessmen like Ambani and Ratan Tata and many other like Jeff Bezos, Elon Musk, they don't pay taxes. मतलब वो काफ़ी ज़्यादा टैक्सेस को अवॉइड भी करते हैं, तो वो लीगल भी होता है, तो शायद वो शेयर्स पे इन्वेस्ट करते हैं और फिर बहुत ज़्यादा टाइम तक अगर उसमें जब रिटर्न आता है तो ऐसे मैंने सुना है कि उसमें टैक्सेस नहीं लगते. तो ऐसा क्या होता है कि लीगल क्या तरीका होता है कि टैक्सेस को हम अवॉइड कर सकें? मतलब जो ज़रूरी है वो तो पे करें, लेकिन जो ज़रूरत से ज़्यादा ही टैक्स लग जाता है उसको कैसे अवॉइड करें? थैंक यू सर.
Okay, so it is very interesting question, and I'll break some myth here. Okay, in this question, see, like Ambani sir or Adani sir or some businessman. Okay, if you heard some ad, Ambani sir have not taken any salary in that particular year. You have heard that terms. Okay, see, salary is the highest form of tax. The government get maximum tax on this salary part and corporate tax. Basically, companies pay tax, right? So if you withdraw salary, you will tax at higher, because after 10 or 15 lakhs, everything comes under 30% slab. These all investment will set aside, because everything will like if you club all these things, will come up to about 5 to 6 lakhs max to max. So, but if you are earning salary of 30 lakhs, so you pay higher tax. Okay. Similar, like if you compare to business, okay, in business what happens? Everything you can like whatever earning you are doing, okay, you can claim like anything as an expenses which you can justify to the law, okay, in the law. So basically, if you are running a company, okay, and if you are doing a marketing, you can call it as a marketing expenses, okay, and if you are going any vacation, you can call it as a business marketing or business meeting something, okay, and business promotional expenses that you can claim. So in business, there is no limit. In salary, if you see, there are 10 or 15 things, 10 or 15 ways you can save your taxes. But in business, there is no limit on that, okay. Now, let comes to this investing part. So, if you heard of startup boom, okay, in last 2 years, if you have watched Shark Tank India, okay, they have introduced some founders as they have net worth of thousands of crores, but they are not paying any single rupee of tax because they are just investing, okay. In investing, see, if you do a transaction, tax will come now. If you withdraw salary, tax will come. If you buy something, GST will come, right? But if you just invest, nothing will come, right? So in that way, see, there is difference between tax evasion, basically tax chori karna, or tax planning karna. So they follow more on that part. They do tax planning, okay? Because if you do investment, okay, in investing also, like for example in capital gain, there are two types of gain: short term and long term. Short term basically if you sell stocks within 1 year, okay. Long term is basically you sell stocks after 1 year, okay. In short term, the tax rate is 15% flat. If you compare it to salary, if you withdraw salary of 40 lakhs, you pay 30% tax, right? If you do investment and earn something capital gain, and even if you sold within 1 year, then only you pay 15% only on the return part, right? But for long term, the tax rate is almost 10% on that part. No tax will come. So that's how they have generated wealth. And as Nirav sir said in the second session, like why we do investment, why we do build some large business, wealth creation, right? So when you focus on the wealth creation, you can plan tax easily, and also they pay tax. If you heard, if you heard in last year or 2-3 years back, if you heard that Kapil Sharma has one of the highest taxpayer, you heard that news, right? Amitabh Bachchan, Akshay Kumar is the highest taxpayer of the country. You have heard, right? So they pay taxes on that part. Okay, whenever you do a transaction, whenever they sell stock, whenever they say sell anything, they'll pay tax on that. But if you just do investment, buy something, and you do not do any taxes. Just like Tesla, just Elon Musk is not pay any tax. Or also these bigger businessmen must in India the tax part is there, right? But if you see on the global level, there are few countries which we call as tax haven countries. Just like Dubai. Dubai doesn't have income tax. So what many people do, after reaching a certain point of income, they just shift their residency. Okay, just like like Akshay Kumar has some another citizenship, right? So that way they shift to their tax base as a tax haven countries and avoid paying tax by doing tax planning. I think I have taken some bit longer, but I've covered this.
Thanks, sir, for touching such a